Well, if we look at the dollar's rise as a whole, overall the dollar's trade-weighted index bottomed out in the middle of 2011. So the overall strengthening we've seen in the U.S. dollar has been a trend that's been going on for about 5.5 years. On average, these cycles last anywhere between about 5 to 7 years. So we would say that the dollar still has a little bit more room to run. The recent strength we've seen in the dollar really had to do with an adjustment in market expectations that the Fed would raise interest rates and the Fed could continue to raise interest rates. So monetary policy is having a huge impact here.
Sure. We were having the debate earlier in the show about what the net effect of a stronger dollar is, because you have capital coming into the U.S. to invest when you have a stronger dollar, but you also have a bite taken out of GDP. So how do you see it shaking out?
Overall, we see GDP growth as reasonably steady. Solid enough for the Fed to continue to resume interest rate hikes. And when we look at the drivers of currency markets, and specifically the U.S. dollar, there are a lot of different factors, but the actual and expected monetary policy action we see as the key driver. And as the Fed continues to raise interest rates, so long as they do that, while other central banks are either keeping rates very low or maybe easing further, then we think that the dollar could continue to rise.
We are getting a lot of help from other countries and from political tumult. I mean, Angela Merkel will be facing re-election later this year. We were talking this morning about, how unstable the ground is that she is standing on. But you also have elections in France, the Netherlands, and then now Scotland is saying that it wants to have its own referendum if the UK loses access to the single market. So that's what pushed the pound even weaker this week. So how much is the dollar getting helped by everybody else out there?
Well, in general, when there's uncertainty, and we had a good amount of political uncertainty in 2016, but when you see uncertainty more broadly and markets tend to be a little bit more cautious, there's more of a reduction in risk sentiment, then that actually tends to be supportive of the U.S. dollar, at least as it relates to some of the emerging or the more risk-sensitive currencies. So we would say that if there are more market jitters, then that could help the dollar to strengthen versus the emerging currencies, maybe not as much versus some of the more safe haven currencies such as the Japanese yen or the Swiss franc, or to a lesser extent the funding currency like the euro. Those currencies could be a little bit more resilient actually in the case of uncertainty.
Bob, how are you playing currencies, or are you?
Agree on the dollar strength. As a large cap U.S. equity manager tells me what to own. It says be careful of the multinationals. Relative economic growth favoring the U.S. and relative interest rate differentials up in the U.S., flattish elsewhere, says you've got to think dollar strength is good news for the domestic companies and not great news for the multinationals, to be very simplistic.
But that's been the story for quite some time.
As long as the dollar keeps going up, it will be the story.
How many references do you think we will hear to the strong dollar come next earnings season when people are reporting the quarter that we're in right now?
I think the multinationals will use it as a legitimate excuse why their revenue line, at least if not their bottom line, is struggling to grow.